from Capital Financial Group to help us plan and protect our future. Thank you for being here.
Always great. I'm always happy to be here.
Absolutely. So today we're talking about long-term care coverage. So what exactly is that?
Now, we've talked about this in the past, and what I want to know, I want people to know, is that long-term care is basically health care, advanced health care, when you get to the age where you can't take care of yourself or your family can't help or isn't in a position to help. So long-term care is a way for you to have somebody take care of you like into the future. I mean, we hear about long-term care facilities. They could be $100,000 or more a year, but it's a facility, if you go into the facility, basically you're checking into a hotel.
Right.
You're leaving home and you're probably never going back to home. But there's also home health care, and a lot of people want to stay at home and they want to have the people come to them and take care of them. So it's a case-by-case basis. It's more expensive a lot of times to have home health care because you have to have 24/7 coverage where people, like 3 different people were waiting on you and helping you. So again, making sure that someone is taking care of you when you can't take care of yourself. That's what long-term care is.
So it is planning for your future, making sure you have that care. Again, you know, some people have kids to have that sort of long-term care plan.
But do the kids want to do that?
Right,
that's a full-time job. So then again, you need to have money put aside to pay your kid because your kids can't work their job.
So smart. So can we get coverage without buying a traditional long-term care insurance policy?
This is very important because I've been authorized to offer long-term care individual policies for about 26 years, and I've never offered one because I read the fine print. And the fine print's scary.
Oh, wow.
There's out clauses where the insurance company can get out of it. They can raise your rates in the future. They really don't want to cover you. They want to take your money and don't want to cover you. So about 5 years ago, some of the big life insurance companies announced that they would now have a long-term care rider added to a life insurance policy. So what is that? Well, you hear this word rider. A lot of people don't know what a rider is. Think about a moving company when you think rider, right? So, but a rider is something you add on to the policy. And this is a way for you to use your death benefit. Let's say you have $1 million policy. And a lot of people do have $1 million life insurance policy. So when you die, your next of kin would get $1 million check, tax-free. What if there was a way where you could benefit from your own life insurance? You used to have to die to benefit, and how are you going to benefit if you die, right? But this way, it's called a living benefit. So if you're alive and you have to go to a long-term care facility or you want to stay home, you can take up to $100,000 or more a year out of your death benefit, tax-free, and use it to pay for your long-term care. It's the best invention I've ever seen in the life insurance industry, and a lot of folks watching right now have an old life insurance policy that does not have this, and maybe are overpaying because life insurance rates have gone down the last 10 years. So I think it's good to get a review, make sure you're in the right place, and if you qualify, get into the new life insurance policy that lets you take the death benefit out and use it while you're alive.
So some people at home are wanting to make sure that they're not going to use up all of that money before they pass away, because nowadays we are living longer. These long-term care facilities, like you mentioned, are very costly. So what would you say to people who maybe are concerned that they would kind of bankrupt that account?
Well, having something's better than having nothing. And so if we have $1 million policy and we use all that million to pay for long-term care, if we didn't have it, we would have left $1 million worth of bills to our family. Now we're not. So anything is better than nothing. So I know it's scary.
Right.
Things are getting more expensive. Well, if this year hadn't proven anything, we were all worried about health care.
Absolutely,
right?
absolutely.
So we need to make sure we at least have some coverage, and the best time, your best equity is your health. The best time to see if you qualify is today, because tomorrow something could change.
Yeah, that was my next question. When should we buy into one of these policies?
As soon as possible. The younger, the better. And so I was talking to Thomas, one of my producers. He's in his 30s. I said, right now is the best time for you to get it because you can lock the rates in. You never have a rate increase.
So what do you need to do to start one of these policies? Is there a health check? Is there, what kind of stuff?
The younger you are, the easier it is. But there's like a home health care, like someone will come and take blood from you to make sure you're healthy. And if you're not, they can, even if you're not healthy, you still qualify a lot of times. Maybe a little bit of less coverage or whatever, but it's better to have something than nothing. Again, I'm 54, and I hold my breath every day when I wake up to make sure when I open my eyes I can still see. So we have to make sure that we have everything lined up correctly, and then it takes a lot of the worry out of retiring or living in retirement or getting close to retirement when we know we're taken care of like that.
Very important.
Health care, retirement, 2 very important issues. We can handle both of them in one swoop. People call right now.
Perfect. Thank you so much, Pete. That is great advice. If you guys are interested in learning more about long-term care coverage from Coach Pete and his team, text CBS 17 to 21,000 or call 1-888-991-9001. Thanks so much.